All right, and we are live. Thank you guys so much for joining us for Atlanta's newest homeowner. This is a community dedicated to helping as many people as possible achieve the dream of homeownership. So it seems like it's a dream that's only getting harder as home prices have risen, interest rates have risen, but homeownership is still the bedrock of the American dream and the first step on the path to building wealth for you and your family. Owning your home gives you some control over your future. It gives you stability and safety for your family. It's the place where memories are made and loved ones are cherished. And so some of the ways that we aim to help is by lowering the barriers to entry, by giving you the knowledge, the systems, and the relationships you need to succeed. But first, if you'd like to see more content like this, I'd love for you to go ahead and give us a like and hit the subscribe button. And also, I'm joined here today by Connor Wright with Supreme Lending. Hey, Connor.
Hey there.
So Connor helps first-time homebuyers get the right loan to fit their particular situation. Connor, I'd love for you just to tell us a little bit about yourself, who you are, and where you come from.
Absolutely. Thanks for having me. Again, as you mentioned, my name's Connor Wright. I work here with Supreme Lending Southeast. We're located in Alpharetta, Georgia. I grew up in Stockbridge, Georgia, so I'm not too far from the perimeter there. I currently live in Smyrna, where I've kind of made myself feel at home. But been a Georgia local my entire life, and truly is an honor and a blessing to be able to work with folks each day to purchase where I live.
All right, awesome. Well, for the first-time home buyer, the whole process can be really confusing. So I like to break it down into just thinking about it as a team. So the home buyer is going to need a lot of people in their corner and on their team. So first off is a realtor, second a lender, third an inspector, and fourth an insurance agent. And there's probably a few more we could think of. But you definitely are going to need relationships with a team of people who can help you through the process. And I just want to say, that over the last 2 years, having a good lender can really make or break a lot of deals. So I had the privilege of helping a first-time homebuyer couple. They were really sweet. They're very motivated, but at the price point that they could afford, there was a ton of competition. So we put in offer after offer after offer on lots of homes. But because there was so much competition, we were trying to get their offer, their contract as competitive as possible. We were doing as tight a due diligence as we could. We weren't doing any other contingencies, weren't going to be asking for repairs. But the real kicker was they were an FHA buyer. They didn't have the cash to be able to go over list price by very much. They couldn't offer the appraisal gap waivers that a lot of other offers were having. And so what really sealed the deal was the lender we were working with was able to get them fully approved for the FHA loan so that we could narrow down the closing time to 14 days. And to me, that was ridiculous. But being able to turn that screw on their offer was what got us under contract on the home that they ended up purchasing. Sometimes people perceive FHA as having a risk and maybe being a longer time, but the lender was able to really help them be as competitive as possible with an FHA loan. And on the flip side, I'll tell another story. I was working with an investor, and it was his third property. He was from out of town, and he did the big box online bank pre-qualification, and that was what he wanted to go with. And so we started taking a look at properties, and we started making offers on properties. But when I called the big bank to finally get through to their loan department to find out, like, hey, what's the fastest terms we can get, so we could close this faster and have a competitive contract. They were like, it's probably 30 days, but maybe 45. Why don't you give us longer? And my jaw almost hit the floor because I don't think they cared about making loans, let alone caring about their clients getting into properties. So eventually it just wasn't able to work out because the big banks couldn't come through. So believe me when I say that working with a great local lender is really important because they know the speed of local markets. They know the terms that you're competing with among other buyers, and they're going to help you get the most competitive offer. So Connor, let's jump in. So what are some common loan types that buyers will hear about, and what are the typical loan programs for a first-time home buyer?
Yeah, great question. Well, there's plenty of loan programs out there. And depending on your current situation is going to really determine which one we end up going with. So the most common loan programs for a first-time home buyer would be a conventional loan and an FHA loan. Now, keep in mind there are other programs out there such as VA, USDA, et cetera, but those are going to be specific to folks that have certain service eligibility or certain location eligibility, meaning they live in rural areas. The most common that we're going to see is FHA and conventional. So those two programs are great for first-time home buyers. They both have their different things that are going to make them more attractive to a different person. And both of them, I would say, they're going to be the most common. So the positive side is that between those two programs, you really do open up a ton of eligibility for a lot of folks to purchase. The lowest credit score acceptable on a FHA loan is 580. So meaning that from a 580 all the way up to a 740, there's plenty of different eligibility within that range, and gives us so much opportunity to work with to show what program works best for you. So the big differences between those two programs would be that an FHA loan, again, is a government-backed loan. So it is going to allow you to purchase with a more lenient upfront investment. So for example, all FHA loans, no matter the purchase price, are going to be requiring of a minimum of 3.5% down. So 3.5% down gets you in the door on an FHA loan, as well as a 580 credit score. In most cases, we can also qualify too. So between those two, again, it just opens up an opportunity for a ton of folks in different categories to really be able to still have the opportunity to purchase, even though they don't have the perfect scenario. Exactly. And then we look at some conventional options, and conventional is a great program as well. Conventional has a smaller, a little bit higher of a credit score requirement. So conventional is going to require a buyer has a 700 credit score. But even in that, they do have first time options as well that allows someone with a 700 plus credit score to put down as low as 3%. So both are really going to be great programs for realistically whoever would be hoping to purchase within them. It just depends on a few different caveats as far as which one we end up placing you with. But outside of that, they're both great options, and both of those would be the most common that you're going to hear when you start to do your initial research.
And also, would you add VA loans in there?
Yeah, so a VA loan will be a great option. It won't be for everyone, as you do have to have a prior service eligibility, meaning that someone that has been or currently is military. But if you are a veteran or someone that has, maybe you're also could be potentially married to a veteran, then you do open up an eligibility to be in a VA loan. And a VA loan is great because it does allow for someone to 100% finance a loan, meaning that 3.5% or that 3% that you would have to bring to the table, you now can 100% finance, and you don't have to bring a down payment. So that's a great option, and we really do appreciate our service members, of course. And so it's something that is a fantastic benefit for them, as they're looking to settle down and find their home. So I definitely think that's a great option. Again, it might just not be for everyone, but if you do have that eligibility, it makes sense to look at.
Right, absolutely. Yeah, part of the tragedy of the real estate run up over the past 18 months to 2 years was FHA and VA loans were really disadvantaged in multiple offer situations. But we've seen that the market is shifting, and sellers are much more willing to negotiate with FHA and VA buyers. So if you've been discouraged in the past, now is a great time to get back out there in the market. So Connor, I heard you mention a little bit about 3.5% down and things like that. What are the typical costs associated with a loan and closing costs?
That's a great question. So the initial upfront investment when it comes to a loan, you have two categories. Anybody that's looking to purchase, the typical categories you're going to have to pay or your closing costs and your down payment. So your closing costs are going to be a portion of the loan that you pay as a one-time thing to basically take care of a lot of folks that are helping you out in the transaction to make sure that you're covered. So, that is going to pay for your appraiser to go out and make sure that the value of your home is good. That's going to pay for your attorney to do the work that they do, and also to make sure that they're doing the title search to make sure the property that you're purchasing is within good standing and has no additional liens or anything negative that should be on the property. That's also going to pay to add in some additional funds to take care of your escrow account, meaning the place where your property taxes and your homeowner's insurance will be paid out of. That's going to be a great place to initially set that up as well. So what I usually tell people to estimate between all of those things, of course, as well, taxes, settlement fees, etc., the overall cost I would expect would be to be about 3 to 3.5% of your purchase price is what I would expect for closing costs. So usually, if your down payment is a minimum of about 3%, your closing costs will also be around 3% as well. So that would be a good safe ballpark to look for when it comes to figuring how much that you actually might need if you're hoping to pay both.
Absolutely. Awesome. So what would you recommend for a first-time home buyer thinking about getting their finances in order to start the process? What are some things that they should be getting prepared? What are you going to be asking them for?
Yeah, great question. So the main three categories that I tell people that we look at when it comes to buying a home are you're going to be your income, your credit, and then the cash. We call them the three C's: your cash, credit, and capacity. So capacity meaning what does your income look like? What that's going to tell us is just how much home can we lend you. I mean, everything has a limit by each program. So what that looks like is your debt to income ratio. What a debt to income ratio is it's per the guideline of the specific loan program that we're looking to place you in. What is the maximum amount of monthly payment that they will allow you based on what your gross income is? So a good threshold usually is to expect anywhere between usually about 45 to 55% of your income you can usually use, depending on program, for all of your debts included. Meaning that if you have a car payment, if you have some student loans, if you have a couple credit cards, and then the mortgage that you're also purchasing, the combination of those payments usually needs to be below about 45 to about 55% of your total income. So that's the first C, that's capacity. Second one is credit. Credit arguably might be the biggest one, because there are so many programs out there that are really available for a lot of folks, first-time home buyers, people looking to purchase again, buy second homes, buy investment properties. There are a ton of programs out there, and most of them are going to help you be placed in them by the credit score. That's usually the biggest determiner. As I mentioned earlier, you can purchase at a minimum credit score of about a 580. So 580 will get you in the door, and you can purchase in a home. But of course, there's other programs like I mentioned. There's conventional programs. There's subsets of those programs within each. There's down payment assistance programs. There's different options available there that we need to know what scores you have. So there's really never a bad time to purchase as far as credit score. It just depends on what program we're going to place you in, what that looks like. And then the third C that we look at, we've got capacity, we got credit. The last C is cash. So do we have everything that we need as far as down payment? Do we have everything that we need as we look at closing costs? So between the two, if we need to look at getting some other options, then we can take a look at that based on what we know that you have available. So if we have the down payment, but maybe we don't have enough for closing costs, well, then we can look at doing a couple of things. We have some down payment assistance options that are great that a lot of folks utilize, so that maybe you don't have to save up the entire amount if you don't have it already. Maybe we can narrow down and we can take care of one with one option, and then you can pay the rest of it. Or maybe we can also look at getting some seller paid closing costs. A lot of homes these days that are available, sellers are bringing back a lot more closing costs. The market is sort of shifting to a buyer's market. So maybe if you have down payment, but maybe we don't have enough for closing costs, maybe we can get some help from them. So there are plenty of options that we look at for all of those, but usually those are going to be the big questions I have, are those three categories. So once we figure out what that looks like for you, that really is pretty much the entire qualification. It's really that simple. Once we can answer those three questions and we get comfortable knowing what your situation looks like for each, then we can really place you in a solid loan and hopefully get you pre-qualified. So what I would usually expect when it comes to what you'd have to prepare, we would normally look at your last 2 years of W-2s if you're hoping to purchase, assuming that you're a W-2 employee. We look at your last 1 month of pay stubs to show the consistency of your income. We look at 1 month of bank statements to be sure that the funds that you have available are there. And then sometimes we look at tax returns, depending on if that person might be self-employed as well or not. So plenty of things that we pull together, but all of those, every document that we would ask for, every credit pool, all of those are going to kind of come back to being within the realm of those three C's. We're just checking for any one of those different categories.
Right, absolutely. So it wouldn't hurt somebody just to talk to you first and figure out, how far they might be from being able to purchase a home.
That's a great question. Absolutely. If you're hoping to purchase a home, the biggest thing you can do for yourself is to get a better idea of where you stand. The last thing you want to do is get in a position where you need to be somewhere. Sorry. The last thing you need to do is be in a situation where you need to be somewhere, you need to get moved, but possibly you are, in a situation where maybe it's too late. Maybe by the time you ended up purchasing, maybe the time frame wasn't necessarily um, eligible enough. Sorry about that. We got some folks in the background here, but
All right.
here in the office here. But anyway, by the time you want to purchase, you don't want to try to purchase when it's too late. So you don't want to purchase up until the time, and all of a sudden you look at it and you're like, oh, well, I have to be somewhere in a month, and I'm just now getting this started, because we could find anything. You never know what we're looking for as lenders, as far as credit goes, as far as your income goes. So it's so smart for yourself to get ahead of it, maybe 3 to 6 months before, to be able to say, okay, well, take a look at this. And if there's anything that we need to adjust or we need to fix, we can always make those adjustments and turn things around for you on the back end. It's better to do so than trying to do it right before you're looking to buy, because that could put you in a tough situation. We have a lot to fix in a short amount of time. It just may not be the best time to do so.
Right, absolutely. Yeah, I think one of the biggest mistakes that I see for first-time homebuyers is they wait until the last minute to start talking to professionals. And I get it. There's the apprehension because you don't. It feels weird to share your financials with a lender, and there's a little bit of judgment, right? Because I think we all wish we had better balance sheets and less credit card debt and things like that. But being able to just be open and upfront with your lender can really set you up to succeed. And I was at a talk last night where someone was talking about credit repair, and I just didn't realize how credit savvy you could be to help, like the little consumer behaviors that we do can really affect your credit in big ways, and not in the ways that you would normally think. So talking with the lender and trying to figure out how to improve your credit is a really great first step. And do you guys have any resources for helping people figure out how to improve their credit?
Absolutely. So that's a great question. So at Supreme Lending, we actually offer a free credit service through our main credit analyst, Lisa Myers. So she's fantastic. She has been in the industry for 20 plus years, and all her primary focus has been in those years is going around and working in different credit bureaus. She's worked for Credit Plus, Credit Technologies, worked for a couple of different credit bureaus, Equifax, Experian, TransUnion. And her primary job there was really getting really familiar with credit and figuring out the ins and outs for us to be successful. So what we are able to do at Supreme is when we have someone that maybe has a credit challenge, or maybe not even necessarily a challenge. Maybe you could purchase where you are, but you want to get into a higher credit rating so that you can have more availability for different programs. Maybe you wanted to go exercise how to get to a conventional loan if you're interested in one. Well, then sometimes we can always take a look at, hey, if we're at a 660 right now, maybe we can get you to a 700. If you're a 700, but you prefer to be at a high 700, we'll look at that no matter what. So both options are going to be really great for us. But she will take a look at your credit profile. What we usually do is we pull your credit. We'll send it over to Lisa. She takes about 48 hours, and then she'll give us back a laundry list of recommendations for us to be able to go over. And then from there, we can review that plan together. Of course, like I said, it's free of charge as a benefit to working with us. And we just want every buyer to be successful and to have all the tools that they need. So we do that up front. We get that credit review done. And sometimes it may be where you want to go might take you 1 month. Sometimes where you want to go might take you a week. Or sometimes it might take you 6 months. But the biggest thing is that and then by the time that you finish what we're doing and we look up at the end of it, we're at a really strong position that you can qualify for whichever loan program you want and get the best possible pricing available as well.
Yeah, that sounds like a great resource for people to utilize. Now, let's just talk a little bit about the down payment and cash to close. So it's not small, right? It's not a little amount especially for first-time home buyers. So what are some kind of resourceful ways that people can gather together funds for that down payment? What about like gifts from family members?
Yeah, absolutely. So there's plenty of options for down payment. In reality, a lot of people don't know that. The first big thing I want to tackle real quick, of course, as I mentioned, and I want to make sure that this is a big note, is a down payment can be as little as 3%, 3.5%, a lot of people when they're first buying have this expectation that a down payment has to be 20% because they've heard a lot of rule of thumbs. So keep in mind, again, I want to make sure that we emphasize that 3% down is more than enough. And I would say, honestly, it's a down payment that about 65% of my loans utilize. But past that, when it comes to getting the down payment, you don't necessarily have to have it yourself. There's plenty of ways that you can get it. You can get it, of course, from your checking, savings. You can pull it from a 401k even. A lot of 401ks offer loan services or also offer withdrawals for a first-time home buyer. That's an option as well.
Yeah, tell me about that. So that old 401k that I had from my other job, or a Roth IRA, I could pull that money out to use as down payment to buy my first home.
It's a super common area that we see folks getting their down payment from. So a lot of people do utilize, they basically take their 401k. And what a lot of people don't know is, of course, there are early withdrawal penalties for pulling from a 401k. But 401k programs encourage using them for first-time home buyers. They actually waive their penalty and then waive the, they waive the penalty for pulling it out, and then they waive the 10% pre-tax that you're going to pay for the purpose of buying a home as a first-time home buyer. So that's a really great spot to go to if you need, $5,000 or $10,000. You have it in a 401k. It's a great spot to pull it from, and you can utilize that no problem. And we can use those funds, and we can qualify you with those as well. So super great option. But past that, you can use a 401k, like I mentioned. You can get a gift. You can get a gift from a family member or a close documented friend, anyone that is going to be someone that's in your direct space that wants to help you out the down payment. Completely fine to do so as well. So it doesn't always have to be necessarily out of your own pocket. The only place that you can't get a down payment from, a lot of people ask, and just one thing I'll go ahead and note, can't take a down payment from any sort of loans. Meaning that you can't go out and get a personal loan for the purpose of a down payment. Can't take it from any cost in a transaction as maybe an advance from a credit card or anything like that. Anything that we do, most of the case, any option that you can think of to pull funds from, most of them will qualify as long as we can source them, and as long as we're within the realms of what where we're able to pull them from, and you can source where they came from. Other than that, in most cases, you're in reality, you've got plenty of options as far as getting that down payment together.
Awesome. Well, Connor, thank you so much for jumping on this call and sharing with our listeners about the loan process. I think it's one of those processes that for somebody who's not very savvy and kind of new to the professional world, it can be hard to kind of navigate, but I definitely think knowing the right people helps a ton. So what are some ways that people can get in touch with you and follow up with you for more questions?
Absolutely. Great question. So my personal contact information, my name is Connor Wright again. The best way to reach me is honestly my cell phone. I keep this thing on me at all times. And this is the number that I give everybody, whether you're a buyer or a real estate agent, anyone really. So my number is 678-510-8372. That's 678-510-8372. And also, reach out to Matt. Matt is an absolute resource to you, and he can help get us connected. And whenever the time is right, or at least just sit down, figure out what your goals are, and figure out where I align in that. So plenty of options, but of course, like I mentioned, always available. Both myself and Matt are pretty much work around the clock to make sure that first folks that are buying for the first time feel super comfortable, feel like it's an open forum. You can come in. There's no wrong answers. We both just want to help.
Awesome. Yes, absolutely. So if you want to get started on the path to home ownership, you don't have to be 100% ready. You could just be inquiring, asking questions, and wanting to learn more. Connor and I would love to talk with you. So I'll leave Connor's contact information in the comment section on this and the many feeds there are. And I'd love to speak with you. So you're welcome to go on the link that's in my bio, and you can book a call with me. Or you could jump on my first time homebuyer webinar, which Connor jumps on with me, which is a great way for us to walk you through the home buying process from start to finish, so that you understand, how to choose the right agent, how to get your financing in order, and then, how to do proper due diligence, what it looks like to make a creative offer on a home and go under contract and get to the closing table. So love to see you on our next home buying webinar. And until next time, we'll see you. Thank you for joining the Atlanta's newest homeowner podcast live stream. Once again, my name is Matt Martin. I'm the host. And Connor, thanks so much for joining us.
Absolutely. Thanks for having me.
All right. We'll see you.
Bye-bye.